Hello everyone, welcome to the Ichimoku.co and Forex Trading TV daily FX market review for the trading day ending Tuesday, September 16th. Well, firstly to the Euro US dollar, and here we see a negative market in all three timeframes trading below each of the Ichimoku indicators. The Chica span is confirming this bearish price action by trading down below the corresponding price action, looking a little overextended in the depth away from the Ichimoku cloud, and the market is attempting to retrace part of this very significant second time frame and first time frame downtrend that the market has been in. We have tested to the 129.79 level of resistance for the third consecutive occasion and been rejected from there, and also today testing exactly to the Tenkan-sen indicator, being rejected from there on a weak indecisive spinning top type candle. This candle is in an uptrend. We have a candle that's made a higher high and a higher low on a white body, so we have some momentum to the upside. But if you look at where the market's closed, it's closed at the midpoint level, and it suggests that the neither side has gained control of the market in line with the previous day's trading, which was around the midpoint level. So in a rally, we've seen a lack of strength from the buyers where they should have been attempting to gain control, and it really does say something about the lack of strength of buyers in this market. This market seems set up for the sellers to come back in line with the trend being down in all three timeframes. So we will be looking for a breakout down below the lows of the series of candles. Now we can draw something of a pennant pattern, more of a flag type pattern. They tend to be continuation patterns, so we're looking for a bearish close down below the bottom barrier as a continuation pattern, and that would be in line with the market being bearish in those time frames. Also, we're looking for the market to clear the 128.71 level of support, and that will be important. If we see a bearish close below there, we could quickly see the Euro US dollar trading down to 127.45. Just looking at our bands at the moment, and the bands are quite wide here. Previously we saw the squeeze, the strong downtrending price action, the bottom band acting as resistance, and change of sentiment in this market today, with the market being able to close within the band for the first time in quite some time, suggesting that this strong downtrend that we had is well, certainly not as strong as it was previously by trading outside of the band. The market is a fair way away from the moving average. There still is a possibility the market could rally to that average and find resistance around there at 130.59, so we will be watching that. But with the market testing to within the bands on a weak indecisive candle, it does suggest that there is a possibility for the market to trade to the downside. Now what we should be watching here with the current candle as it's forming is for the bottom band to hold as potential support. That's at 129.32 at the moment, so just watch how the market reacts around there. If we see a bearish close down below the bottom band, it will signify strength from the sellers once again, and then we'll be looking for confirmation of that with another some follow through with a bearish candle following that, if that does occur. Doesn't mean that it will occur, but the bands are fairly wide, not wide as with some other currencies, but there still is a possibility, even though we have this weak indecisive candle on a rally, there still is a possibility that the buyers could come into the market and extend the rally a little further. Moving next to the US dollar Japanese yen, and the second last candle on the chart here is the candle we're analysing, an indecisive candle, almost a doji type candle, and suggests certainly that the sellers are not strong in this market. We've seen this very strong rally up above each of the Ichimoku indicators, a bullish market in all time frames supported by the Chica span, and we'd expect to see some decent selling coming in, and we're not seeing that. For the previous day's trading we saw a potential bearish harami pattern. We have had confirmation of that today, with the market changing the trend to the downside, making a lower high and a lower low, but greater rejection with the larger shadow on the bottom, and the buyers just taking weak control of the market. So good potential for the trend to change back to the upside here. We would have expected to see a better sell-off here, considering the strength of these series of white body candles following the breakout up above 105.44. Now if this market does continue to come off, there is a possibility of finding strong support at the Tenkan-sen at 106.03, but it certainly doesn't look as though the market's going to approach that soon. If the buyers come into the market strongly here today on this new candle that's developing, developing and break out up above the swing highs of this candle at the 107.39 level, we could eventually see the US dollar Japanese yen testing up to the 108.58 level. But one thing to watch for here is that we are looking overextended in the depth away from the Ichimoku cloud and the depth of the Chica span away from the price action, but certainly no sign of strength from the sellers at the moment. And just looking at the bands here, bands are very wide and representing high volatility, and it wouldn't surprise to see the market attempt to mean revert or at least test back to the bands. The first level of support here would be the upper band at 106.69 if the market does continue to come off, but at the moment, as that current candle or that candle has finished trading, it certainly doesn't seem as though there's any strength with the sellers, and we are currently seeing buying coming into the market on this new candle that's developing.